Data shows there is trillions of dollars sitting on the sidelines, waiting for the perfect opportunity to enter the markets, whether it's stocks, cryptocurrency, or even real estate. History has shown that when this data peaks, when the most amount of money is sitting on the sidelines, this is typically at the major cycle lows. So is now any different? Are we at the major cycle low with over $5 trillion getting ready to enter the markets? Let's have a look at the data in today's video. Like, subscribe, the notification icon, and to finish off the shills in 20 seconds, our free crypto and economic report is coming out this week. Less than 24 hours to go, so make sure you do subscribe to that. And only 3 days to go to the end of the month for Bybit and BitGet's $300 giveaway. Just use those links down below and follow the prompts there. This is part of our TIA free community with our Investor Accelerator newsletters. This is what you can expect. They're full of data going through crypto, Bitcoin, real estate markets, altcoins, and of course the DeFi space within altcoins as well. So this is going to be a big one coming up this week. Make sure you do subscribe. All right, so let's have a look at the money that has entered the market and money that is also on the sidelines waiting to enter the market. Here is a quick, nice graph around basically another 90 billion entering the market from the Fed. We're up now about 70% of the entire quantitative tightening. So we're at close to around this 9 million mark, so basically the 9 trillion there, dropping down to 8.3. And now with the money injected from the banking crisis, we're back to around 8.7 here. So the info here is that about 70% of the money has come back into the market since we tightened last year, which you would expect, or at least start to quantify that if about 70% has come back in, where would that leave the Nasdaq and other stock markets if that money was to flow back into the stock market from, or in the areas from where it came from? So 70% up from the Nasdaq low puts the Nasdaq back at around 14,900 points. And so far we see the Nasdaq sitting at 12,800. So still about 2,000 points to go. Now, many are still waiting and hoping for a major collapse to the downside, obviously after the banks fell a couple of weeks ago, or at least a few of the banks. But I'll just put this to you as well. When it comes to news headlines and basically anything that's around the fundamental headlines and the media's narrative about what's going on in the markets, this is statistically irrelevant. These headlines are statistically irrelevant because the news is there to tell us about the 1 in 100,000 story that happened. It doesn't tell us about the 99,999 other times that it didn't happen. For example, a plane crashing. There might be 1 in a million or 1 in 10 million. They tell us about that, but they don't tell us about every other plane that landed safely that day. So that's why we don't put the emphasis on those dramatic news headlines, and the emphasis goes on the chart here. And so if this is the case with 70% of the money coming back into the market after quantitative tightening, meaning that they've printed money again, which is essentially quantitative easing, then maybe we could consider that this market will eventually come back and hit this 70% sooner rather than later, which gives us another 16% run to run on the Nasdaq. And we know that the stock markets, when they're looking healthy, also crypto is looking healthy. But in this case, it looks like Bitcoin is running first, as we've seen it break out of significant tops first. As for the Nasdaq, it's still sitting above the logarithmic downtrend. It is putting in higher lows from the cycle low of October, regardless of what the headlines and the narrative is telling us. If you needed to see it for yourself, these tiny red candles just here, if I zoom in, these 1, 2, and this green one here, that is your banking crisis. This tiny little area right here, that is the banking crisis. And from that point, we are now above the previous resistance levels, and it seems like we're putting in a consolidation above these resistance levels, now sitting at around 12,800. The next target levels to break out of, which looking like they could be resistance, would be 13,600, and then as we continue to climb this market here, somewhere around that 14,900, 15,000 psychological level. And we could also look back to some of those previous lows, and there's a top here and another top sitting around that 14.3. So there's a lot of work to do to get up to the tops, which is exactly why the narrative continues to be bearish because it hasn't broken through the all-time high yet. That's typically when the narrative will change from the bearishness to the bullishness. We'll still hear a lot of bears out there, but the bullish narrative will start to become more prominent in those headlines. But for now, this is what people do want to see, which is why the media keeps giving it to us, the bearish headlines. Moving on to where the rest of this money is. And this data, we have household bank deposits and money market funds sitting somewhere around the high trillions. It has excess cash holdings. We're at 2.6 trillion at the end of December, so Q4 in 2022. Now I've got another one here that shows the money market funds asset at 5.1 trillion. Now, if we take an average in between or add the excess cash to the bank deposits and money market funds here, this sets you somewhere up in the low 4 trillions. This data here shows around the low 5 trillions. Either way, it's a shit ton of money. I don't think anyone is going to disagree with that. We've got trillions of dollars sitting on the sidelines. Now, just taking a brief look at this, you've got 2009. This was the bottom. March of 2009, exactly 14 years ago, was the bottom of the stock market cycle. Then we had the COVID pandemic crash here in 2020, another peak in the market. So these peaks are money sitting on the sidelines. This typically happens at the tops of the market. So if this is to happen again, maybe more money comes into the market over the next couple of months. Who knows from this point? But we're really starting to push the limits of how much market money is sitting on the sidelines. And eventually this money starts to flow back into the markets, which causes the starts of those bull markets to really flourish. We can see that here from the peak of 2020. So 2020 at those lows there, this is the money leaving the funds coming back into the market here. So you can see that move down into 2021 was a pretty big move on the stock market. That's this move through here, 2020 into the peak there of 2022. So basically the end of 2021, a pretty decent move. Here is 2009. And then again, the money leaving the markets there, that goes up into 2011. Here are the peaks in 2012. And looking at that money market here, you can see 2009 into 2012. And then eventually it just flatlines and the money starts to come out of the market again. So that shows that at the beginning of these moves, that's where the most percentage is made at those lows from the market as it pushes up. That's typically what happens. You've got the big percentage moves from the bottom, quick move out, and then eventually it starts to roll over at the top there. People are looking to take their profits. So if you miss out on these areas now at the bottom, this could eventually sort of move all the way up to 5,000 points, and then you'd only just start to see this thing trickle over. You've missed out on a pretty decent move from 3,500 points to 5,000. You know, you're sitting somewhere around, quick maths, what, 50, 60, 70%, something like that, from these low points to that next level. And then the retail will start to think to get into the markets after that point. Does this money flow into Bitcoin? How is it stacking up on the technicals for Bitcoin at the moment? Let's have a look at that, but first a quick word from our channel sponsor, New Brighton Capital. For our Aussie viewers, if you already control your own super or have already made the decision to set up an SMSF, New Brighton Capital specialize in crypto accounting for self-managed super funds. Check out the link in the description where you can book in your free 20-minute consult, and be sure to use promo code Pizzino for a $200 credit off your SMSF accounting fees. So how is this $5 trillion going to work its way back into Bitcoin? Eventually, some of it will work its way back in. We're not expecting trillions to come back into the market, because the on-ramps are just getting tightened in the US. We've got this whole Operation Choke Point going on from the US trying to stop the on-ramps into cryptocurrency. That could be a tinfoil hat moment. I don't know. The main thing that it seems like that's going on in the US is that they're trying to slow the possibility of more money entering the market. However, the market, in the case of Bitcoin, is showing us something different. There are still ways to enter the market. There are plenty of on-ramps out there if it's not Coinbase or Binance. There are still plenty of ways to get into the market, and we're seeing that in the price of Bitcoin. We've gone from 19,500 18 days ago to now 27,100. Sure, overnight it dropped 3%, but look at where the support is. We've broken through the $25,000 level. We have support back at 24,000, basically 23.9. So if we get a nice healthy pullback and then the moves start to increase again, so jump from those low levels, we're probably looking at another move to higher prices to test that $28,000 to $29,000 level. So regardless of the news narratives that are going on at the moment, especially with the Binance lawsuit from the US, it seems like it's a nothing burger. And I'll stand by that, especially when we see these major news pieces come out. SVB collapse, Silvergate collapse, and the market bounces from that point. This is something that I posted on Twitter. If you're not following, obviously go and check out the links in the video description. But I posted this and it was laughed at, saying you have to wait. There's going to be more fallouts. It's going to be bad for crypto. We're going to go down further. The technicals were just not saying that. And it's hard to imagine that technicals can override the fundamental news headlines. But really, when you give it some time, you really start to see why the technicals will override those fundamental headlines. They're basically there, like we said at the beginning of the video, to put fear into the newcomers, to put fear into the market, to try and scoop up lower prices. And we talked about this on the video yesterday, the Wyckoff video here. So if you haven't seen that, I'll leave a link to it at the end of this. Great video. Fantastic positive feedback from you guys. So thanks very much for that as well. So going back to this, I've got this chart here, which we will revisit time and time again. Just have a look at where these major catastrophic collapse event announcements come out and just how you can see the price of Bitcoin compared to when those actual situations arise. This is the FTX collapse. We are well and truly above that entire area of the collapse. And we're above the Silvergate collapse. We're above the SVB collapse. US equities, August peak. This is when SP500 peaked as well. The market came down. There was a lot of inflation fears at that time. And basically, we're sitting now in the price range of the interest rate hike fears back in June. And this is also around the time that Celsius, Voyager, BlockFi, those sort of things went down. We're getting close, probably not any time in the next few days, to break these levels at those low 30,000s, but at this rate, we'll probably get there and break back above these fearful news events, which is typically what happens at the beginning of bull markets, which is essentially called climbing the wall of worry, something we've talked about many, many times in the past. So looking at the grand scheme of things, the macro picture, this is what happens during the bull markets. In the short term, you definitely see the price go down while that news is out for the day. So it becomes good trading opportunities for those short-term traders, but then you've got to differentiate, are you a short-term trader or a long-term trader? We're looking at the macros here. This is what is showing up time and time again, as is a few of the other macro indicators, which are quite common out there. So I think it's important just to at least recognize those indicators. The first being the 200-week moving average. We've seen that already. This has been 2 weeks now. It's closed above the 200-week moving average, which is the blue line here. So we had that the 13th of March, basically just after the banks collapsed, the market took off, Bitcoin took off. And yes, there is the narrative behind it that it's because people are fleeing the banking system, etc., etc. Forget the narratives, just focus on the charts. The narratives are there to confuse and add noise to the markets, because one day that is going to be positive news that banks collapse, it's good for Bitcoin. If we're in a bear market, that would be bad news. That's why we avoid the news narratives. So it's been 2 weeks above this line. Maybe we come back and test the high, which also works out pretty well with those previous tops, those double tops that the market broke through on extreme volume. So it's a good, nice, safe place for the market to find support again, at least test the possibility of support at around that $25,500 level. It's also above the 200-day moving average, which found a fair bit of rejection on the way down. Now it found beautiful support on top of the log down trend, bounced off that during, this is the weekly bar here, that was during the banking collapses. All right, that's that week there. And you can see how strong that move was out of the lows of the banks collapsing. So a good sign there, especially with that strength in the volume as well. So are we starting to see that $5 trillion trickle into Bitcoin? Well, of course, from the chart here, it would say so. There's got to be some money coming back into this because the market's nearly doubled in the space of a few months, going from 15.5 to testing those limits at around $29,000 now. So eventually, this money starts to find its way back in, especially if investors are getting more comfortable with buying stocks as those stock markets are putting in higher lows. they start to flow over into more riskier assets like Bitcoin, and the whole cycle of gambling on risky assets continues because you've got bigger multiple returns in something like Bitcoin and crypto compared to the SP 500. And so we're starting to see that on these particular charts as well. The price is increasing, putting in higher lows. Some of the other indicators which are also showing the money is flowing back in, things like the RSI. You can see we have these at the bottom, basically touching beneath the 30 mark, coming back to the midline, 50, and then you've got your top line here at about 70 on the RSI, happening at the lows time and time again. The yellow line, in this case, not necessarily the log downtrend. It's not anchored exactly to it like we do, but you can see the market break out of those zones and then essentially go on a nice start to that bull market. So it's still early days in this case. Another couple of indicators here, the Ichimoku cloud. It is entering that cloud again for the first time. Typically, it runs to the other edge of the Ichimoku cloud and eventually puts in that next bull market, like you can see multiple times here. There was a bit of a problem through 2019, 2020, obviously the pandemic here, but essentially it's the start of that bull market according to this indicator as well. If you're stuck around this long, thank you very much. Much appreciation to you guys, just like the appreciation to you guys on Twitter as well. When you turned bearish talking to me at the beginning of 2022, I unfollowed you. Big mistake of mine. I appreciate your hard work. Your YouTubes are so insightful. So thank you very much for your kind words. I really appreciate it. And for you, your comment today, question, do you think Bitcoin is more likely to hit $100,000 or $10,000 now? You probably know my answer based on the previous videos, but I want to hear from you guys in the comment section. 100,000 or 10,000? What's more likely to occur next for Bitcoin? I'll see you guys at the next video. Don't forget those links down below and that $300 from Bybit and BitGet ending in 3 days. I'll see you at the next one. Until then, peace out.